Hi traders, Nathan Bray here from ACY Securities. Well, what a break, a false break we may be calling it at this stage on gold this week. So we had a triple 2,074 monthly high that had been holding multiple times over the last few years. Okay, sometimes people refer to it as the COVID fear top. They call it the Putin fear top, and then of course most recently other travesties that are happening around the world. But price, folks, has definitely failed up around this 2,074 level, as you can see on the chart. So that was all until earlier this week, when suddenly that triple top was broken and gold went to new highs. However, it definitely shot up quickly and then it failed very quickly. So what I want to give you an insight into, which of course is the liquidity zones you should watch out for in the market. So our own senior market strategist, Duncan Cooper, does a 30-part trading course explaining everything from beginner through to advanced. So one of those is available free of charge to everybody on this topic called Liquidity Zones in his Smart Money Concepts 3-part series. So that's in the description. Feel free to watch it. If you've got any questions, you can always ask Duncan in his live analysis webinars throughout every week. Okay, so this top. So what I want to explain to you is what are these liquidity zones. So let's say you're a big bank and you've got, or an institution or a hedge fund, okay, and you've got big sell orders. If you were just to go into the market, for example, let's use a number, $500 million. You need to sell that, let's say of gold, right? You need a lot of buyers. Otherwise, you're going to start to move price potentially lower, okay? So you're not getting the profit that you could be getting. So what you've got to think about are where are areas where we might have a lot of buying activity to soak up that large order without moving markets a great deal. So this example with gold, I was looking at the monthly triple top, okay? So price has now broken through that. But if you were looking for a lot of buyers to sell to, okay, then that could be an ideal spot. Why? Because think about it, if it's triple topped over the years, people might say, I'm short gold, so therefore my buy order to exit the position, I'll stick above, just above the triple top, okay? That's where I'm going to have my buy order to close out my position, in effect your stop, okay? So what have you got there? Right around that zone, you've got a whole lot of buy orders. Now, if you need to sell and you have a lot to sell and you don't want to move the market lower, that could be a spot. Okay, on this chart, you'll see right now, that's the zone. Now, what did we see? We saw a number of activities. Obviously, the trend is up on gold, and we know it's a triple top. And we also had some geopolitical uncertainty or announcements coming out, which might have put the buying market into a bit of a frenzy. But as price spiked through, don't worry, in that liquidity zone, there was equally just as big as sharks looking to sell to those buyers, okay? And at the end of the day, which is what I brought up in the video I made earlier this week, I wanted to see price hold above that triple top, okay? Unfortunately, it didn't. It actually failed back below, and days later, guess what? Price is back below that level. So there must have been some real selling power occurring at the top there. So this is one of the reasons why I'd say to you folks, keep an eye on what we call false breaks, or what some people view as liquidity zones where large orders might need to be filled. Good luck with your gold trading, everybody, and keep in mind, this order or these large orders being filled doesn't change or reverse trend. I will be now watching to see if price can get back above that level, and potentially all those selling orders or a large amount are gone, and we could see gold then continue in this uptrend to higher levels. That's all from me. Have a great weekend.